Hello everyone, and welcome to the Chamber Music Mindset. My name is Anna Rathman and I am your host. As always, I need to remind all of you that everything you hear in this video is for information purposes only. It's stuff that I want to share with you. It doesn't guarantee anything, and that this is not investment advice. Okay. Even though the government is still shut down and has been all week last week, we did get some information that gives us a clue as to what's happening in the economy. Especially this week, I'm going to focus on us, the consumers. So we'll get to that. We'll talk about the markets a bit. Certainly there was a surprise on Friday, which I'll get into. And then we'll talk about what we're expecting this week coming up. Okay, so let's start with the markets actually, because we like to get that out of the way. It was a negative week. Let me share with you exactly how negative it was. Let me see here. Okay, S&P 500 for the week had negative 2.41% as its performance. That was led by, surprisingly, the value style, which is sort of, you can kind of think of value as sort of the old economy, not necessarily the tech and high-flying growth companies. So Russell 1000 value style scored negative 2.7%, while the growth sector gave us negative 2.25%. So we'll talk about why that is, and it is related to tariffs. Remember, tariffs are taxes levied on goods, not on services, and certainly tech sector is impacted by this, as we found out on Friday. But investors put a little bit more hope into how it's going to grow and into the future rather than the immediate impact of tariffs that can happen in a lot of companies that are importing goods from all over the world, especially China. And it was a risk-off type of a sentiment because we had small caps or small companies lose a lot more at negative 3.28% return for last week. So it was a rough week. I won't sugarcoat it. Most of that came on Friday. There was a little bit of profit taking. So when markets run up a lot, investors sometimes tend to take, okay, maybe we shouldn't get too greedy. Let's take some of the gains that we've had to lock in some of those gains. There was a little bit of that happening as well. But let's go directly to Friday because Friday was the most notable market event. So in the middle of the day, we got news that apparently the negotiations with China wasn't going well. And President Trump came out and said, okay, and it was very, I mean, you could hear the frustration from the White House that China is not being a good faith negotiator and that there's really no reason for Mr. Trump to meet with Mr. Xi from China. They had actually planned on meeting one-to-one in South Korea at the end of the month. And apparently Mr. Trump thought that there wasn't a reason to. Why did that happen? President Trump pointed to the most recent Chinese policy on restrictions on its rare earth minerals exports. Now remember, rare earth minerals, we need those minerals for our tech companies. Those minerals are very, very important to create the chips, create the infrastructure and the hardware for us to continue to grow in tech. And so let's just put AI in the spotlight. Rare earth minerals are very important for AI. And frankly, the United States was trying to negotiate with China so that they would lower the export controls on rare earth minerals. And, you know, United States had offered a few things like, okay, NVIDIA, we had basically told NVIDIA, you can't sell AI chips to China, but suddenly we said, okay, maybe you can. Maybe we're okay for NVIDIA to sell H20 AI chips to China. That was sort of an olive branch. China said, okay, no thank you. We're going to have our tech companies locally use only Huawei chips. Okay. So we don't need you NVIDIA chips. And that was a bit of a way of saying, okay, US, you think you're offering us an olive branch by allowing us to buy this, but guess what? It's inconsequential. It's irrelevant because we're not even going to use them. So there goes, a good faith negotiating move, right? And then after that, there's been a few other instances where China came out and said, we're going to do a probe on NVIDIA for potential anti-monopoly laws, breach of it, right? So monopolistic behavior. That's not very nice. That's throwing a wrench in a process where two parties are it's a high stakes game here and trying to negotiate in good faith. And suddenly there's this probe. And then last week, we also had another announcement from China saying they were going to look into Qualcomm for a company they bought in Israel. So it had nothing to do with China, but it's as if China was sort of this global police in a way. And so that they were going to look into potential violation of antitrust laws in China. So all of this is happening in the middle of the negotiating process. And the thing that I think broke the camel's back was this further restriction of export controls of rare earth minerals. I mean, it was a message because not only were we trying to get them to loosen it and they restricted it further, the dates were interesting. So the next goal was November 9th to try to get this deal done. And China said that this new restriction goes into effect on November 8th. So clearly they were sending us a message. It took everybody off guard. And frankly, this isn't just against the United States. This is really for everyone else on the planet who wants to use this technology and wants to grow their economy through this technology. So there was a little bit of a surprise announcement from President Trump, and that sent the markets wheeling downward. And, to be honest with you, we knew that United States was already talking to China and that this negotiation was continuing to happen. But as often happens in the markets, it went into the back burner. It sort of receded into the background as we were talking more and more about deals that were happening in AI. In fact, there's another one this morning between Broadcom and OpenAI. So that's where our minds were. And we were paying attention to earnings to see how the tariffs that were already implemented were impacting the corporations. But frankly, we totally forgot. We hadn't talked about it. It wasn't in the forefront of the news cycle. And then suddenly this hits us. We thought it was going well. Treasury Secretary Bessent had continued to tell us that we're making strides. And suddenly, there's a surprise in the negative side. Okay. Now, this is Monday when I'm recording, and the markets have rebounded because President Trump has basically said, don't worry too much about it. And frankly, I agree with him because there's way too much at stake here. Both countries need each other. We've over 20 years, we have sort of intertwined our economic fates. Okay, so we trade with one another. We need each other. So it doesn't really help not to have a deal, okay, for both of us. So they're going to walk very, very carefully, and ultimately there will be a deal. The question is time. And during that time, what do the earnings look like? How will the tariffs actually impact corporate earnings and inflation on the rest of us? That's the uncertainty. And the uncertainty remains as long as we do not have a deal. There probably will be a deal. Will it be a month from now? Will it be in January? I think it's a 2026 story, which means between now and at the end of the year, we're still living in this uncertainty, and markets certainly do not like that. So that was the markets last week and why the performance was so negative. And most of it was due to Friday. Earlier, I said that we would talk about how some of the data and information we got from last week impacts us. So that's you and me and our families and our friends. So we're talking about the consumers. This is, our day-to-day. I'm going to talk about two earnings from two companies. One is Delta and the next is PepsiCo. And both of those companies' earnings, you can sort of, go through the details and see how they are looking at the markets and their constituency, right? Their consumer base, and how they're changing their business to maximize their profits. Who are they catering to? Well, Delta is pretty clear. They're really doubling down on their luxury experience, which means, business class, first class, and premium economy, premium seats. It turns out that people are paying up for these things, right? And it turns out that that's where a lot of the airlines make their money. So that is where their focus is. That tells you that a lot of what's happening in our economy in terms of growth and what's propping it up are the people who can afford to pay for these, upgrades, right? And for very expensive seats on when they travel. So that brings to mind something we haven't talked about in the markets for a very long time, which is the idea of a K-shaped economy. So I don't know if you remember, but when the pandemic started, we talked about all sorts of different shaped economies. So we talked about the V-shaped economy where, the economy falls because we have all these shutdowns. And then when we reopen, everyone has FOMO and YOLO, you only live once type of a phenomenon. And then the economy does a big pivot and it goes up and it's in the shape of a V. Okay. And then we talked about a U-shaped economy potentially where it goes down and then it sort of remains in this little trough and then it comes back up. We certainly saw a V-shaped economy for sure. And then later we started to talk about a K-shaped economy. If you think about the letter K, it has, the vertical line and then you have a line going up and then a line going down. Wait, that was backwards. So line going down, line going up and a line going down. So this is to depict that there are sort of two different economies in the United States. The line going up is for the people who actually are high earning, people who are able to pay up for services like the luxury experiences in airlines when they fly. And then the line going down is sort of everyone else who are having issues and trouble buying cars because not only car prices are high, but also interest rates are really high and trying to finance the purchase of a car. Same thing with homes. Interest rates are high, but then also home prices are high. And I talked about those home prices and interest rates in a different video. I can't remember which one it was, but why that is. So these are the folks who are having a really hard time with all of these difficult environments. And frankly, that's a lot of people. And frankly, that's a lot of people who are younger, who are in the Gen Z generation, who are trying to get their feet on the ground to not only start their careers, but also start their families, etc., etc. Okay, so this is a really difficult time for a lot of people. So that is the idea of a K-shaped economy. The other company that I want to talk about is PepsiCo. Now, this is not just about the K-shaped economy, but it's also about sort of the environment that we're living in, the rhetoric that's taking place in our society about our health. So Pepsi, if you think about Pepsi, you think of sugary drinks, right? I don't know when was the last time I had your cola, like Pepsi, Coke. Is Coke Pepsi? No. But you know what I mean. The colas, right? The sugary drinks. Pepsi has, they're catering to a healthier demographic by coming up with protein drinks, some meat snacks. Things are a little bit more keto-oriented, protein-oriented, and less sugar. I think there's like a prebiotic drink that they sell that has done really well in North America. And that is where a lot of their revenue is coming from. And they did beat on revenue. Now, if you think about those products, they're a lot more expensive. Right? They're a lot more expensive than your sugary drinks. Sugary drinks are not only addictive, but they're also cheap, which is why they used to at least to sell a lot. But this tells us that people are willing to and able to pay up for things that are healthier and that they actually, that meet their own criteria for what they're willing to put into their bodies, right? But you do have to pay up. So there is this trend of companies catering to not only current trends, but also people who are willing to pay up and also definitely charging more, right? So this is the K-shaped economy. Now, before I run out of time in this segment, I do have this time limit in each segment because I'm not very high tech. I will talk about what we also learned from the University of Michigan Consumer Sentiment in the next segment. Okay, on Friday, we received the University of Michigan surveys, and this is really surveys about the consumer. So it wasn't good news in a sense that it didn't move much from the month before. And, what do we expect? The conditions haven't really changed that much. If you think about where the University of Michigan surveys, consumer sentiment survey was pre-pandemic, it was actually pretty high. At good times, we were above 100, certainly in the 90s. And right now, we're sort of trending and sort of flatlining around 50s, 55. There was a moment when it was a little bit higher, but it was short-lived. It was about 2 years ago or 3 years ago when we opened the doors and people came out and they were feeling better generally. Remember, this is a sentiment survey. It came in at 55. This is not a number to be writing home about, and this actually wasn't even really the news. The news, in my opinion, was the 1-year inflation expectation. Now, 1 year ago, in October of 2024, the 1-year expectation for inflation was at 2.7%. So remember, we had, the Fed's target for inflation is around 2%. I've always said that it's settling around between 2.5 to 3%, and that's certainly where the consumer sentiment was a year ago. And why do we care about consumer sentiment? Because consumer sentiment, how you feel about inflation, how I feel about inflation and the economy, it helps us to shape how we behave, how we spend. And that is really important because becomes a reality in the economy, right? So what does it look like a year later? Hey, Lucas, please sit, okay? Please sit. Sorry. A year later, the latest reading was at 4.6%. So we've gone from a year ago, 2.7% expectation to 4.6%. That's a huge jump. And that has everything to do with tariffs. We made a huge jump, much higher than 4.6% in April and May. And as we got information that maybe tariffs won't be so inflationary after all, it has certainly come down, but is nowhere near where we were a year ago. Why is this important? It's important because, as I said earlier, it shapes our expectations and it shapes our behavior. So I'm going to tie this sort of to Delta a little bit. If you think that the prices are going to be nearly 5% more a year later, maybe you're going to take that vacation that you were maybe planning for 2026 in the fall to this year. Why pay 5% more if you're going to do it anyway? Yeah, you were planning on doing it anyway, right? And this is true of all of a lot of different things. If I know that my refrigerator is in its last few, months, why put that off? Because a year later, it's going to cost nearly 5% more. So this is sort of the psychology behind inflation. So that pulls forward our spending. Well, I'd rather pay a little bit of a lower price now. And this actually is the behavioral definition of what inflation is. It spurs on more purchasing, more activity, economic activity, because it pulls all of the future activity forward as much as you can. And so that's why growth, economic activity, and inflation are so close together. That's why economists, when they're talking about it, when market participants like myself, investors, talk about inflation, we often link it to growth because of this phenomenon. So this is one of the reasons why, despite the fact that inflation and high prices are so punishing and it's so painful, consumer sentiment or consumer spending has been so robust. So we can't ignore this particular phenomenon in what we are seeing. People are saying, oh, things are so expensive, but people are still spending. Maybe it's because they still have a lot of money. Well, maybe it's because they don't want to be paying 5% more a year later, and they're pulling their spending forward. So some of this is, in economic literature. Some of this you learn in the classrooms, especially if those of you out there studying economics, you will learn this. Some of it is necessities, right? If my refrigerator dies, I'm going to have to buy it, whether inflation or not. I'm just going to have to assume that price. Some of it is that, there are people who can afford it, who are actually contributing to a robust spending environment here in the United States. There's a lot more to this story, but certainly for the University of Michigan, a survey last Friday, the 1-year inflation expectations actually stood out to me. Looking ahead this week, we have bank earnings coming out this week. This is one of my favorite parts. As sort of a bond junkie, this is one of my favorite parts of the earnings season is when large banks like JP Morgan, Citigroup, Morgan Stanley, and you name it, Bank of America, when they report, because what they tell us is it gives us a little bit of a view. Actually, it's not even a little, it's a big view of how the economy is doing, how businesses are doing, how you and I are doing, the consumers are doing in terms of our credit cards, our borrowing, mortgages, all of these things. It is a very good look into, not government dependent data on how we're all doing. And frankly, how the banks are feeling about the economy. If banks are feeling like things are, slowing down, they're going to also de-risk in many different ways. And so this is an exciting week for myself. Certainly next week, I will come back to you and tell you what we've learned from some of the bank learnings that we're getting this week. As for government data, we're still not getting them because the government is still shut down. I am hoping for a speedy negotiation in Washington, not really for the data. They will come when they come, but certainly we're starting to feel the pinch with payments not going out to families and government workers that really should be getting them. So let's all hope and pray for a swift negotiation in Washington. I will see you next Monday.
Hey, Lucas, do you want to tell those folks in Washington that they should definitely reach a deal this week? Isn't that so important? Is it? So important. Okay. I love you.